Hello, folks. This is Jim Raspberry from Raspberry Financial Services with our March 2014 economic update. In this video, we'll be talking about some of the major events that move markets in the first quarter of 2014. We'll also be discussing what might affect markets in the days and weeks ahead. We ask that you stay tuned at the end for a required disclosure statement if you don't mind. Markets were volatile throughout the first 3 months of 2014 when a chilly winter and lackluster economic data caused stocks to lose some steam after their stellar performance in 2013. The major indices ended the first quarter mostly flat, with the Dow losing 0.72%, with the S&P 500 gaining 1.3%. Now, those stocks may have lost some momentum last quarter overall. There were a number of individual turnaround stories that show company fundamentals may be improving on a case-by-case basis. After growing 2.6% in the fourth quarter of 2013, the economy likely slowed in the first quarter of 14, though we don't have official numbers yet. Predictions on gross domestic product growth range from 1.2% to 1.5%. Unusually cold weather across much of the United States caused slowdowns in the labor market, manufacturing sectors, housing, and other important segments of the economy. Now that spring is here, we can hope that warmer weather will trigger some improvements to economic fundamentals. Despite the slower pace of growth, many analysts still think we're on track to achieve GDP growth in the range of 2% to 3% in 14. The February jobs report showed that job growth accelerated more than expected, while the unemployment rate ticked upward slightly. The jump was due to an increase in the number of Americans looking for jobs. This is an optimistic sign for the labor market. All told, if we add up official and estimated numbers, it looks like the economy added roughly 500,000 new non-farm jobs in the first 3 months of the year. The Federal Reserve held an FOMC meeting and voted to continue dialing back its monthly bond purchases while keeping interest rates low. At this rate, the Fed's quantitative easing programs will end in the fall of 2014. Fed Chair Janet Yellen clarified the Fed's position by stating that though she believes the economy is still strengthening, additional quantitative easing is still necessary to protect growth. Global worries dominated headlines for much of February and March and caused some stock market jitters as investors processed how a new Ukrainian crisis might affect global trade. Emerging markets saw significant outflows as investors feared Federal Reserve tapering might expose weaknesses in developing economies and shifted assets to the developed world. Looking ahead, markets will likely experience more volatility as investors digest March jobs reports and look for improvement in economic data. Earnings season may also contribute to volatility. Q1 earnings reports will likely prove lackluster. Currently, expectations are for earnings growth to be flat or even negative due to slow demand in the first quarter. On the other hand, optimism is high for a strong second quarter, and good news may send stocks higher. So, once again, this is Jim Raspberry with Raspberry Financial Services signing off for the month of March 2014. I hope you found this commentary interesting and informative. We'd love to hear what you have to say in the comment section below. If you have any questions about what you heard in this update, we'd love to hear from you. Feel free to give us a call at 601-335-0024 or by email, jim@raspberryfinancial.com. Now for our disclosure statement. While we believe the information in this report to be reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. I am a registered investment representative, and securities are offered solely through Emeritus Investment Corp., AIC, member SIPC, FINRA. AIC and Raspberry Financial Services are not affiliated. Additional products and services may be available through me or Raspberry Financial Services that are not offered through AIC. I can be contacted by calling 601-335-0024 or by securities email jim@raspberryfinancial.com. Thanks again for watching. We look forward to talking to you next month.